what do multi-asset allocation funds do? So think about like, a good team, whether it's at work or in sports or any other field, right? And the right team will have the right balance of a risk taker, somebody who's like, resilient, somebody who's very balanced. Think of it in, the context of like a good movie as well, where you can have action, comedy, romance, all of that in one single movie. Or when it comes to food, if you have the right mix of everything, then you get like a real good experience of the whole product, right? Whether it's a movie or food, or whether it's a team where you get like a proper, well-rounded experience. And that's what is the whole potential of multi-asset allocation funds, because what these funds offer you is within one single fund, you get the benefit of equity, you get the benefit of debt, and you get the benefit of gold and silver. And each of these have like, different roles and responsibilities, right, for individuals. So you have in equity, you have a lot of growth potential. Equities are a claim on businesses. So when businesses grow, they generate profits, they become bigger, better. You as a shareholder benefit from the growth potential of equities, but it doesn't go up in a linear fashion. There are periods where they don't do well also. At that time, you get the benefit of debt. And what is debt? Debt is like, it can be government debt, or it could be corporate bonds, which generate income for people, right? But more importantly, there's a steady source of income, and they don't go down in value as much as equities have the potential to. And then there is like the benefit of gold and silver, which have proven to be resilient during uncertain times, whether that's war, whether that's geopolitical crisis, whether that's currency crisis. And historically, we have seen that gold and silver have been part of traditions and cultures, because they have had like a very long history in terms of being a relevant sort of investment or asset class. So if we can get the benefit of equity, debt, and gold and silver all in one fund, then what we are looking at is a multi-asset allocation fund. And they also become important because, as this slide shows, that the various asset classes, whether it's domestic equities or international equities or debt, gold, silver, they have like a different return history on a different period or a different phase. So sometimes, domestic equities do better. Sometimes gold, silver have done better. Sometimes debt has been far more resilient. So there are like these benefits which we get by having all these multiple asset classes within one single fund, right? Even if you think about equity markets, they have phases. It's not, as I said, all linear in terms of it keeps going up all the time. Maybe over a long period of time, it ultimately ends up being higher, but the journey is not necessarily in one direction or smooth. There are phases where there is equity bull market, but then there are phases where markets become range bound, and there are phases where there is like a very strong bear market, right? And what we have also seen is the correlation between different asset classes. What do I mean by correlation is sometimes equity goes up, then debt goes down. Sometimes debt goes up, equity goes down. Same with gold, silver as well, versus equities and gold. Sometimes overseas equities go up, domestic equities remain there only. So what we think about it is in the context of, let's say, if somebody was to think about a cricket team, for those who actually follow cricket, sorry, I could just think about this example since it could be a little relatable, is you have like different sorts of batters and different set of bowlers and different set of all-rounders, and then there could be like some good fielders as well. Now what you end up getting is a mix of all of these good benefits of everything, and then if you think about the team, it becomes a much balanced and a well-rounded team, right? So that's what you get the benefit from these various asset classes. Now, this is an interesting slide where we've tried to show the different asset classes, whether it's domestic equities or overseas equities or debt or gold or silver, uh, the second column, which is the CAGR return, these are the returns which have been generated by these assets every year over the last 5 years. So think of this as on a average annual basis, how much returns have been generated by domestic equities, overseas equities, gold, silver, but on a average basis every year for the last 5 years. So every year for the last 5 years, right? Very interesting thing there. If you look at domestic equities, but even overseas equities have done well. But look at gold and silver. Even they have provided like very good double-digit returns to investors. On the column next to it is volatility, and for those people whom I can explain, volatility is how much things go up and down. Because as I said, like equities are not going up in a smooth manner, right? They go up and down. There are phases where they go sideways, but basically, how much volatility they are creating in your portfolio. And then, like the last column is what we call as like the volatility adjusted return. So basically, if somebody was to divide how much returns the different asset classes have generated versus the volatility, how much is the volatility adjusted return? Now, what becomes interesting is if you look at the second last row, which is a multi asset allocation fund. So this is not our fund, this is just a sample multi asset fund where anybody can have, like, let's say, on a monthly basis, consistently 60% in domestic equity, 30 in debt, and 5 in gold and in silver. Then even those kind of portfolios or those kind of funds can generate decent amount of returns on a annual basis every year. But look at the volatility. The volatility is much lower because these portfolios, they benefit from debt, they benefit from gold and silver. So think about, like, in the cricket context, where the returns are like how many runs the batter has scored, volatility is how many deliveries the batters have faced, and the last column is what is the strike rate, right? And if you see, the strike rate for multi-asset allocation fund is very interesting. Even when you add, like, in the equity component some international equities, the strike rate becomes even better because international equities have also potential to generate decent amount of returns, and they also help to lower the volatility of the fund, right? So now, if we all think about the benefits of like a multi-asset fund where you have like equity, debt, gold, silver, even with that equity you have domestic and overseas equities, then it gives like a beautiful product where you get the benefits of everything. It also manages the risk in a better manner. And if we all think about ourselves at an individual level, whether all the people we have on the call today, or whether we have all the people who are not on the call but who are associated with investing, all of us, whether for us, for our clients, for our families and friends, what do? We all act as multi-asset fund managers. And why I say so is because all of us have exposure to maybe equities, maybe we have exposure to mutual funds also, we may have exposure to FDs, a lot of us have PPF, some of us may have gold, silver also, right? So what is this? This is nothing but a multi-asset fund, but instead of it all being in a single fund, all of this is being done at an individual level, right? So I may have some equity shares, some equity mutual funds, I may have FDs, I may have PPF, I may have gold, silver as well. Now, if I can get the benefit of all of this in a single fund, then what I really have is, a very powerful idea or a powerful concept where within one fund I get the benefit of all these things, right? Now, I just want to share like a story with everyone, and hopefully it relates or resonates with a lot of us, right? And when I was talking to a lot of people, and when I told them this story, they were like, "Oh, yeah, 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 I completely understand. I completely get it. I can easily relate to it." And this is a real life story. I'm not just making this up. Okay, this is like a proper incident which happened to me a good few years back. So there was this. One day, my mom, she said she has to go out of town urgently for some purpose. She has to be out of the house for 2 days. So it'll be just me and my father, and we have to manage everything. And we said like, yeah, 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 should be okay. How difficult will it be? We are two of us anyways. So she said like, no, no. I mean, there could be a lot of things. Maybe I can arrange for some help for y'all. And we said like, no, no, no. We'll manage it. And she went. Morning was okay, not too bad. Then by lunchtime, slowly things started to surprise us. So first of all, all these days we were given things on a timely basis, the right things also, right? So we had to decide for ourselves, what are we going to eat, and then it took us a bit of time to figure out what we wanted to eat. The second question was how are we going to prepare that, and we had to figure out the recipe, and then after figuring out the recipe we had to figure out, oh, what are the ingredients, where are they kept, do we have enough of the ingredients at home? And after figuring all that out, when we started preparing, there were all these disturbances at home in terms of there would be like somebody coming and knocking on the door, there would be phone calls, there were like deliveries which we had to take, and somehow like we got through the whole afternoon meal. Felt like it's doable. But then again in the evening the whole thing started, and we went through it again, and then we had to go through it the next day also. And that's when like when I was thinking about what is multi-asset and why multi-asset funds could be useful, is think about what the mother or the lady of the house does. And it's not just for me, like a lot of us on the call or watching this would have also experienced it, right? That they are actually multi-asset managers in some way. Why? Because they have to take care of the kids. They have to take care of the kids' routine and their requirements. Then they have to take care of like the husband and their requirements. They have to also look at their own requirements and their own needs. Then they have to look after other members of the family, right? All of this time they have to manage all the other outside things as well. And they do all these things in a timely manner, in the right manner, and they do it not just for one day. They do it day in, day out. They do that weekly, throughout the year, right? And when we actually faced those 2 days where we had to take care of the house and all the things which we had to do, what we realized is like, whilst we were able to do that, it was not in the most efficient manner, not timely. Maybe we were not consistent as well. And what the mother or the lady of the house was able to do was to do all these things in a very efficient manner, in a timely manner, in the right manner, with the right proportions of various things, and do it consistently, right? And if we were to think about the fact that when we relate it to investments and what we all do, right, whether for us, for our clients, or our families, we decide how much equity we want to have, physical gold, silver, FD, PPF, etc. The question is, like the mother or the lady of the house does the whole thing in a very nice manner and a consistent manner, can we also get the benefit of the investment side of things in one single solution? And that is what multi-asset allocation fund provides us, right? Within one fund, we can have the benefit of the fund managers deciding for us what is the right allocation to domestic equity, what is the right allocation to gold, silver, to debt. And if we can do that in a right manner, with the right frame of mind, with the right approach, then what you end up getting is this whole beautiful idea about getting the benefits of all these things in one single fund without having to do that, right? Now, a lot of times, like, people have come to me and said, hey, you know what, but I understand all these things, I can do that. I'm like, that's great. Do you do that in a regular manner? And they're like, yeah, yeah, yeah. I mean, not only am I knowledgeable, but I also have the time to do all this reallocation and rebalancing what you're talking about to the right asset classes. And then I'm like, okay, there are people who are knowledgeable, who really understand these things, and they also have the time, right, to do these things. But actually, when you end up doing these things, does it not create tax inefficiencies because you are doing at your individual level? So imagine like if somebody was to reduce their equity allocation and sell equities, it creates like a tax event or an incidence for them. So think about it. You first of all need to have the skills to be able to figure out all these asset classes. You also have to figure out the timing and when you want to reallocate. Then you also need to actually do it. You might be busy in your work, clients may be busy in their work, they may not actually get the time to do that. And then, even if somebody wants to be able to do all that, there is taxation to take care of. And that is where, like, if you think about multi-asset allocation fund, where equity, debt, gold, silver, all of these are taken care of, and I don't have to worry about the taxation because the fund manager will decide within the fund whatever they have to do, they can do it in a timely manner. And that is, like, the whole benefit or efficiency of a multi-asset fund, which otherwise all of us are doing at our individual level through all these individual exposures we have, right? So now we have like a solution for the whole thing. You have a professional solution and a solution which is going to be done in a disciplined manner and in a tax structure which is efficient, because all of this happens within one single fund for you, right? So think about, this is like a beautiful product and a solution which is not just another product where should think about only the returns. This is a solution which can take care of savings. This is a solution which can take care of overall wealth of an individual, because otherwise we all end up investing individually, and now we have one fund which can take care of all this. So that's something which I just wanted to explain to people, and hopefully to understand that what is the real benefit of a multi-asset allocation fund. And then, within that, what we just wanted to share is how do we think about this whole thing, multi-asset allocation for the Invesco multi-asset fund, right? And so when we were thinking about what do we want to do in our multi-asset fund, because it's such an important and an interesting category and a solution for investors and for clients, what we realized is, generally being invested in India, most of us, all of us, we have decent amount of equity exposure in some form or the other to domestic equities. But today, lot of growth, lot of innovation, lot of interesting ideas, businesses can also happen outside of India, which we may not necessarily get exposure to. So some of us may have like international equities. The question is, do we have the right proportion of international equities? Do we even have the right international equity? Or do we know when to like reduce it or increase it, right? So for us, when we think about a multi-asset allocation fund, the real benefit and the beauty is if it can be like a proper balance of everything. So for us, international equities is an important component, and that's what we have tried to incorporate. Similarly, when somebody also think about gold and silver, and I showed you those returns, the average annual returns over the last 5 years. So on an average annual basis, the returns have been 15.5% for gold and silver. You actually realize that it's a proper investment opportunity, and the beauty is like gold and silver also provide like a bit of a balance to your portfolio. It is not all equities, right? So for us it was important that when we think about the asset allocation mix for the Invesco asset allocation multi-asset allocation fund, we think about international equities and gold and silver with the right proportion. We don't want to just give it like a small allocation and keep it on a static basis, on a monthly basis. It was very important for us that we have the right allocation, and whenever the opportunity arises, we can increase it. When there is no opportunity, we reduce it. So if you look at this particular slide, the right hand side table, this is the tentative asset allocation of this particular fund. So this fund, the overall equity exposure will be between 35 to 75%. And within that, overseas equities will be up to 35%. So like a fairly reasonable exposure one can get to international equities. And I explained to you like, why this can be an interesting opportunity, because, you get exposure to innovation and growth, which could be outside of India. Also, as I said, gold and silver are an important asset class for us, and that's reflected if you look at the range we have for gold and silver. It is between 10 and 30. And as I said, we don't want to think of it as a static allocation of 10 to 12% and just keep it as it is, because there is real benefit if you can have the right asset allocation to gold and silver on a or periodic basis to benefit not only from the returns but also the fact that it reduces the risk in some ways, right? So that is like the whole asset allocation framework for us. In terms of equities will be between 35 to 75, of which overseas equities will be up to 35. Gold and silver will be between 10 and 30%. And when we think about these allocations are not static for us. We have a very deep and a detailed framework which we follow on a monthly basis, where we look at lot of data and analyze data, domestically, overseas. So like we look at global data and how the world is doing. We look at what US economy is doing, what India is doing, what the markets are doing, what the volatility is, what the valuation is. So there is like a proper process and a framework which we have, which helps us to decide what should be the appropriate asset allocation at any point in time. And based on that framework and process, within this allocation, we keep on changing our asset allocation to these various asset classes. So as far as the investor is concerned, they don't have to bother about the actual asset allocation themselves, and it's tax efficient as well, because all of this happens within the fund. It doesn't happen at an individual level. So from a taxation perspective, this particular fund, if an investor was to hold for more than 24 months, then they get the benefit of long-term capital gains at 12.5%. So think about it, like, if a lot of us have FDs or debt or gold or silver, it becomes a little tax inefficient if we were to think about the returns from them, or if we were to sell, gold and silver and have short-term capital gains, etc. Even equities for that matter, if we were to like sell, etc., then we might have to think about long-term, short-term, all those things. Now, within the multi-asset fund, as fund managers, we can do all the reallocation and the right reallocation within the fund. So, from a taxation perspective, the investor doesn't have to worry. You don't have to worry about it, because if the investor stays in this fund for more than 24 months, then they get the beauty of like a long-term capital gains at 12.5%. So, because very tax efficient structure as well when it comes to the whole reallocation and the optimization between the various asset classes. So long-term capital gains at 12.5 if somebody was to think about 24 months. And we think like, 24 months is a reasonable time frame, because think about it, what are we getting here? This is our wealth, this is our savings. So we're not thinking about it as a short term. It's like a long-term solution for wealth. This is a long-term solution for our investments, for our savings. So 24 months is a reasonable time frame for anyone to think about. And if you were to stay for 24 months, then you get the benefit of long-term capital gains at 12.5%. Now, what exactly are we thinking about it from a philosophy perspective within this whole thing is, if we can on a right frequency, and for us the right frequency is monthly. So on a monthly basis, in a disciplined manner, we have our framework which we look at. We look at a lot of data, we look at a lot of things, and based on that, we decide what should be the appropriate asset allocation to domestic equity, to international equity, to gold, silver, and to debt. And we do that every month. So, the beginning of the month, we look at all this data and analysis. Of course, on a day-to-day basis, also we keep a track of all these things, but at least on a monthly basis, in a disciplined manner, beginning of the month, we run all this, what we call as our framework. This framework helps us to decide what should be the optimal asset allocation for an investor. So whenever there is an opportunity in equity markets, we can go up to 75%. Whenever we think that the markets are not offering great opportunity, but the risks have increased, then we can reduce our equity allocation. Sometimes what happens is equity allocation stays the same, but the opportunity is between international and domestic. So let's say if international equities look very attractive to us, we can increase that. We can reduce exposure to domestic equities. Sometimes gold and silver look very attractive and interesting, so we can increase exposure to gold and silver. We can reduce to equities. Sometimes even debt offers opportunity. So within our framework, if we think that the opportunity is very good in debt and there is higher risk in equities and gold, then we can increase to debt and reduce to equity and gold. So the whole concept or the whole idea is think about things on a comprehensive and a holistic basis, which, as I said, we do all on an individual basis through our own asset allocation. But we do that within this fund. We give like the right uh, weightage and experience and exposure to international equities also. We think about the right exposure for gold and silver also, and we have a wide range for that to benefit from it. And all of this we try to do on a monthly basis in a disciplined manner, so that as far as the investor is concerned, they don't have to worry that if the market conditions have changed, if the economic conditions have changed, if valuations have changed, if risk has increased or reduced, then what should I do? All of this is taken care of by the fund manager within this particular fund. So you don't have to worry about those decisions, because all of this happens within the fund. You benefit from taxation also, because you don't have to pay taxes every time the reallocation happens. And at the same time, you get the benefit of international equities, domestic equities, you get the benefit of gold and silver, and all of this through monthly optimization following a disciplined approach. So that is like, the real power and the beauty about multi-asset as a concept. As I said, if you go back to that story which I told about, the mother and the lady of the house and what they do and how they do, and you can see all the benefit it provides you. The same concept is through a multi-asset allocation fund, where a fund manager can give you all the right benefits at the right time, in the right proportion, in a professional manner, in a multi-asset fund. If there is a right framework and a philosophy, then not only this fund can provide you good returns, but even help to manage the risk, uh, manage the consistency of the returns. Because the whole idea is, if the asset allocation at every point in time is appropriate, then returns as well as the risk both are taken care of, and hence the overall experience is that much more consistent, that much more smoother, compared to if people were to allocate only to one asset class, or if, like, in some ways, as I said, try to do it themselves, because here you get the benefit of a professional fund manager doing it for you and have tax efficiencies. So yeah, so I mean, that was what we wanted to talk about, of the category, of the beauty about multi-asset allocation fund. And think about it, this is not a fund which has a timing to it, because it's like saying that at an individual level, I'm thinking about timing. No, 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 no. What we are saying is, whether equities do well or equities do poorly, this fund can still provide you the benefits, right? Because as we said, equity can go up to 75% within the fund. So you still benefit from the upside of equities. But if there is no upside and there is risk, we can curtail it down as well. So this is what we call as like a all-weather fund. This is like a proper solution for investments and savings and wealth. We all do it at our individual level, but now we have the benefit of having like a solution which is professionally managed. And as I said, there is no timing to it. This can be provided as a solution when equities are doing well, when equities are not doing well, or even when equities are doing poorly. Because the beauty is, we can change the allocation depending upon the season or the phase of the market, so that investors get the benefit of everything at the right time, in the right way, with like a proper thought process and framework around it. So yeah, I mean, there's a lot which I can talk about here, but I just wanted that if people can really understand and appreciate the benefit of a multi-asset allocation fund, as I said, what we are trying to do within this fund is to focus on this asset allocation on a monthly basis through a disciplined approach, through a framework, have good value in international equity exposure also, and in gold and silver. And if we can do that in a right way, in a right manner, and through a disciplined approach, then the overall outcomes could be very interesting and consistent. So yeah, I'll stop there and see if people have any questions either on the category, product, or our approach, or our framework, or our philosophy. And yeah, happy to help.
Yes. Thank you so much. Thank you so much, Heron, once again for this lovely presentation. It was really very insightful. And especially, I've thought the example that you have given. It was primarily based on a woman. So you have created the importance of the woman in every man's life, which is the best part.
I
Yeah.
think that was
So I
always
think
there. I just try to highlight that
absolutely,
it is a reality which people can actually relate to. And I'm saying, like, a lot
absolutely.
of us would have experienced it. So I just wanted to genuinely share this example.
Absolutely, absolutely. Yes, thank you so much. And I think I have received few of the questions coming from our partners. So I will just display it on screen for everybody's
Shh.
understanding.
Sure.
Just give me a moment. Yeah. So I'll just read out for everybody's convenience also. So my first question to you is, what is the core objective of the Invesco India multi-asset allocation fund and how does it align with the current market environment? I think you have touched upon a bit, but if you would like to add on something
Yeah.
to it.
So yeah, no, I mean a very relevant question, and hopefully I can try to answer it properly again. So see, think about it. What is asset allocation at an individual level? All of us, we decide how much we want to invest in equities, in FD, in PPF, physical gold, etc. Right? So what is the objective of the Invesco India Multi-Asset Allocation Fund? Is to help you to do exactly the same thing in a disciplined approach with a framework, with the right asset allocation in terms of domestic, international equities, in terms of gold, silver, and also to try and optimize all these allocations at the right period and in the right manner so that as an investor, you don't have to worry about whether my asset allocation is appropriate or not, right? Because otherwise, at different points in time, people can feel whether I should increase equities or whether I should increase gold or whether I should renew my FD or should I invest it in equities or whether I should reduce my equities and buy something else, right? Now, all these decisions which we all try to address or make on a regular basis, all of this can be achieved through multi-asset allocation fund. And our fund, what we are trying to do is help you achieve that balance in terms of the appropriate asset allocation at the right time and change that whenever the situation requires so that you don't have to worry about the asset allocation. And from a taxation perspective, it is efficient for you because trying to do it at an individual level can create taxation events when we do the reallocation. How does it align with the current market environment? As I said, think about asset allocation is an ongoing process. It is not like market dependent. Whenever the markets are doing well, we still make a decision which asset class should I invest in, how much should I invest in. Whenever the markets are not doing well, we again make a conscious decision whether should I book profit or reduce my risk or get out of this and invest here. So what are we doing? Whether markets are good, whether markets are bad, or even when markets are not doing anything, we still decide, oh, what should I do? Should I change my portfolio or allocation? So this the beauty about a multi-asset allocation fund is, as I said, it's an all-weather fund, it's an all-season fund. It's something which we try and do on a regular basis ourselves at an individual level through our own asset allocations. All of this can be done in a very nice and a comprehensive manner, in a disciplined manner through a multi-asset allocation fund. So that's the objective, and that's how it helps you to address any market environment, not just the current market environment. I hope that was like,
Yeah, yeah,
something which people could relate to basically.
definitely, definitely. Thank you once again for the elaborative answer. So, yes, moving to my next question. How is the allocation between equity, debt, and gold planned in this fund, and what factor will influence the changes in this allocation?
Okay, great.
Yeah.
So I think the presentation which I was sharing actually had that. I can spare a bit of time on helping people understand. So it's not that, like, we decide our allocation on a random basis. It's not that we decided, just out of the blue. There is a proper thought process which we have. There is a proper framework which we have. So if I can just help people understand this a little bit. So what we do is on a monthly basis, as I said, in a disciplined manner, in a monthly basis, what we do is through this slide, if I can help explain people, how do we decide the actual asset allocation between the various asset classes. So what we do is we calculate the equity score. Now, this is a score on a scale of 1 to 5. 5 is a very good score, 3 is an average score, and 1 is not a great score. So we do this scoring on a monthly basis for equity. We do the similar scoring for gold or silver also. Now, what do each of these scores represent is how much allocation I should have. If the score is a 4, how much allocation I should have if I have a score of 5 or a 3 or a 2 or a 1. And how are these score calculated? So in the case of equity, we look at a range of factors. We've highlighted those factors there. So we look at the macro signal, we look at liquidity, positioning, sentiment, valuations, policy framework. For gold and silver, we look at interest rates, inflation, currency, demand, supply. Now, based on these factors, we give each of these factors a score. A weighted average score is calculated. And just to give an idea, like, let's say if the weighted average score is a 3, then our equity allocation will be between, let's say, 55 and 62. We fine tune the actual allocation, but a broad score of 3 will tell us. If the score is a 5 equity, then we will be towards the higher end of our equity allocation, which is either 70 or 75. Similarly, if the gold score is a 5, then we will have a higher allocation to gold and silver. It could be 25, it could be up to 30. If the gold and silver score is a 3, then we will have like a neutral allocation, which could be around 15% or something like that, right? Now, the interesting thing is all of this happens in a disciplined manner on a monthly basis, and it considers lot of things. It is not dependent upon only one thing or only two things. It is a proper comprehensive framework. It considers lot of factors. We consider factors on a global basis, on a domestic basis, and we give equal importance to equity, similar importance to gold and silver, to international equity also, because the whole idea is if we can help derive the optimum asset allocation in a monthly manner by looking at a proper framework and a range of factors, and that is how we then do our actual asset allocation between domestic, overseas, gold, silver, and debt.
Yes, perfect, perfect. Thank you so much for this detailed answer. I will again present my screen.
Yeah, sure.
Yeah. So next question from my side is, what makes this fund stand out compared to other multi-asset allocation fund in the market? This is the most common question asked by many of the partners.
I would say this is like the mother of all funds. This is Ma fund.
Okay.
But no, in all honesty, look, I mean, I think there are other multi-asset funds. They have been in existence. The concept of multi-asset is similar, that you get exposure to equities, debt, and gold, etc. But I think for us, it was very important when we actually think about what we wanted to achieve in this, in terms of like what are we actually trying to arrive at. And for us, it was very important that this whole asset allocation. So like, the focus for us is on asset allocation in terms of domestic, overseas, gold, silver, and debt. And our focus is on having a right framework in a disciplined manner on a monthly basis to optimize between these asset classes. So in this fund, our focus is not in terms of taking a lot of credit risk. So on the debt side, for example, we want to have a very clear policy that we will largely invest in government bonds or only very high quality AAA bonds in select situations. Similarly, on the equity side, our whole philosophy is we want to limit stock selection as much as possible. So for example, on the international equities, we will simply buy like S&P 500 index ETF as far as our international exposure is concerned. So we didn't want to complicate it in terms of deciding which stock I should buy, how much I should buy, which sector I should be overweight on, because our whole idea is that the returns in this fund should be from active asset allocation. If this active asset allocation can be done in a disciplined manner through a framework and on a right periodicity, which is monthly for us, and it has the right mix of the right asset classes. So, for example, as you saw, for us, international equities is very important asset class, and our framework allows us to have up to 35% in international equities. Similarly, gold, silver is an important asset class, and we have up to 30%. So long as we have the right mix of asset, we have the right range of assets. If we can focus on this active asset allocation on a monthly basis with the right periodicity and the right discipline and framework, then we think we can have like a better opportunity to provide like a consistent outcome, given that we are not trying to be too focused on stock selection or credit selection, or trying to be like very narrow in terms of the allocation range for some of the asset classes. So we want to be flexible. We wanted to have like the right philosophy and have it in a discipline and a simple approach.
Thank you once again for bringing this clarity, and thanks for the deep understanding. Yes. Moving to my next question, how does this fund aim to manage market volatility, and especially during the period of high correlation among the asset classes?
Yeah, no, I think that's a very good question and a very important question for people to think and address, right? So look, I think our whole, as I said, like our whole philosophy is market conditions change, economic conditions change, valuation of different asset classes also changes. And then there are periods where there is a lot of euphoria. There are opportunities as well, and there are risks also in the market, correct? What is our approach and what are we trying to do through this particular multi-asset allocation fund and approach is to try and assess all of this in a disciplined manner on a monthly basis, try and look at not just domestic but how the global picture is looking at shaping up, because understand, like gold and silver are not a pure domestic asset class. Domestic equities are domestic asset class, but gold and silver are international asset class. So in some ways you also need to have a framework to understand what is happening globally, why is it happening, how can it impact other things. So for us, it's very important to understand all of these things in a comprehensive manner, in a periodic manner, through a right framework and an approach. And once you try to understand this, you want to also understand what are the risks, what are the opportunities, and have a framework which helps you to understand what should be the right mix of assets at that point in time. And if next month, if it changes, then you reallocate that also. So that's how we think about it in terms of the approach is very flexible. So think about it like, if I again take like the cricket example where you have a very balanced team of good batters, good bowlers, all-rounders, fielders, then you don't have to worry too much about, oh, am I going to play against the best team or an average team? Am I going to play them at home or abroad? What do I do if I have to bat first? What do I have to do if I bowl first? So that is what the beauty of multi-asset with the right approach is. For us, the approach is if I have the right framework and philosophy and right asset classes, then I'm not worried in the cricketing context of the situation in the market, or I'm not worried too much in terms of what happens if this happens, because I have all the balance available to me, and my framework and my process, if I am true to it, then it will help me to manage it appropriately.
Absolutely. Yes. So I think example always works well in favor of the people. So I think understanding is clear now to all the investors. Yes. So moving to next, what kind of equity, debt, and gold instruments will the fund primarily invest in? And there are any geographical exposures or thematic preferences?
Cool. No, again, a good question and a detailed question in terms of trying to understand the fund a bit better. So, if I were to start with gold and silver, the exposure will be through ETFs. So, we will simply buy gold ETF or silver ETF whenever we have to do that. As far as debt is concerned, as I said, our focus is primarily on government bonds because we do not want to generate returns by taking credit risk. However, we have the ability to take selective credit risk. As I said, our philosophy is only during certain times when the corporate bonds in debt segment, they look very attractive, then we'll think about them. Otherwise, on a business as usual normal basis, the debt exposure will be in government bonds. And then on the equity side, again, our philosophy and approach is very simple and clear, which is we want to focus on asset allocation and not stock selection. So when it comes to international equities, we will simply buy or invest in S&P 500 ETF. So again, we do not want to do stock selection for international equities. Similarly, for domestic equities, our philosophy is very similar, that we will not do small caps in this fund. Even for mid caps, what we will try and do is we will buy an ETF or a index fund. Only for the large cap portion of the fund, what we have given ourselves the ability is to directly invest in stocks. So there are tax regulatory reasons why we have done that. But again, there, just to be very clear, our philosophy is we do not want to do stock selection. So our approach for large caps is whatever is our internally approved large cap universe, we will try and invest across all of those large cap stocks in such a manner that there is no big allocation to either one sector or one geography. I mean, geography as in domestically, but we will not have either a sector preference or like a stock preference that there is a higher weightage given to this stock versus other stocks. No, our whole idea is, whatever these stocks are part of the Nifty 50 or the next 50 index, we will look at how much percentage is there in those indices, and whatever is our approved universe, we'll try and invest it in those approved universe for the large cap portion, but with the same philosophy to avoid like stock selection bias. Because think of it like, this is an asset allocation fund. Somebody coming in here is coming in for active asset allocation in terms of the right asset classes at the right time in the right proportion. So we want to be focused on that as opposed to doing credit selection and stock selection.
Perfect. Perfect. Thank you so much for the brief understanding. And moving to next, I feel this is a very important question. For the debt allocation, what is the credit quality and duration strategy the fund intends to follow?
Correct.
Yes.
So again, that's a very important question. It's important for people to understand. So as I said, our whole philosophy is keep it like an asset allocation product. Do the timely asset allocation and stick to that. So on the credit side, again, what we have said is it will be largely government bonds. In select situations, we will do high quality AAA bonds. We are not going to go down in terms of the credit curve by selecting like single A, and because that's not the objective of the fund. The objective is to focus on asset allocation and not in terms of figuring out that this bond is more attractive versus that bond, right? So as far as the credit quality is concerned, as I said, primarily government bonds, in select instances high quality AAA bonds. Now in terms of the duration strategy, so again our view is we want to have low duration as much as possible. Now we don't want to again, so thinking about the cricketing analogy, we are not coming here with a certain preset mind that this is the way I'm gonna play or this is the way I'm gonna bowl. Okay, we want to be adapt and flexible, that if the situation demands or if there is a very interesting opportunity, then if it fits overall within our framework and the risk tolerance, then we can, in some instances, have like a higher duration. So, for example, since the beginning of this year, what we started to see is in the Indian debt market, there were very good and interesting opportunities, and the risk was also manageable and low. So, in those situations, we are flexible that if the opportunity is very good, the risk is not very high, then we can take a bit of duration risk. But if there is no opportunity available, then we are not going to try to be heroes here by just trying to experiment and be aggressive about duration. So duration strategy for us is will have to be sensible in terms of the opportunities available versus the risk, and overall how does it fit in within my overall uh, view about the market. So let's say, for example, if we are expecting inflation and growth to come down and hence RBI to cut interest rates, then we want to think about debt in a positive manner. And in that situation, have some portion of the debt allocation with a higher duration. Some portion will still be a steady duration. But if that opportunity is not available, then we are not going to force ourselves and say, oh, we want to increase the duration for the sake of it. Then we will be having a decent duration so that it's risk adjusted and not like overly exposing the fund to risk.
Yeah. Thank you for the precise answer.
But basically, I think if I can help to understand like the whole framework here is to be not fixed in our mindset that we are going to do this only at all times. I think what we wanted to do is be flexible about risk and opportunities, but be very clear in terms of what is our purpose and have a good thought process around it. So as I said, we look at all this uh, detailed data, domestic, global, it's a comprehensive set of data we look at, and we do it in discipline on a monthly basis. That helps us to ensure that we are not positioning ourselves only for one type of a situation. We want to be flexible and be able to do that within the fund.
Yeah. So at the same time, we have to be flexible and strategy at place as well. Yes.
Correct.
Yeah. So moving to my next question, how will this fund adjust to changing economic condition such as rising interest rates or fluctuating commodity prices?
So again, as I just said for the last
We
couple
have
of
discussed,
questions,
yes.
that
Yeah.
broadly our framework is we look at things in a comprehensive manner. We do not focus only on one asset class. We look at everything in a totality. We look at a lot of data, which is fundamental data. We look at a lot of data, which is market related data. We also look at a lot of risk parameters in terms of volatility, etc. Right? And because our framework is comprehensive in nature, it allows us the flexibility to decide on a monthly basis in a disciplined manner what should be your appropriate allocation range between all these various asset classes. But again, our focus is on asset allocation, and that's what I said, that even on the fixed income side, not do much credit risk. Even on the equity side, don't do stock selection, but largely do it through index type of allocation, because the whole beauty is that if you can do the asset allocation appropriate at the right frequency in the right manner, then it takes care of a lot of the things already, and that's what we want to focus on and be very clear and simple about it.
Yes. Yes, so thank you so much, Hiren, once again, Hiren, for sharing your invaluable insights today through this presentation. It was really a detailed presentation from the Invesco Multi-Asset Fund and provided us with a clear understanding of its potential and disciplined approach behind this management. So definitely your expertise and perspective have truly added value to our knowledge, basically. And we appreciate your time and look forward to future engagements with you once again.
Sure.
Thank you.
No,
Thank you to you and your team as well. Thank
sure,
you.
and thank you so much for allowing us this opportunity to help people understand the real benefits of it.
The pleasure
Also,
is ours.
how we are
Mhm.
thinking in terms of our fund and what is our philosophy and the clarity and the ease in which we want to do this. But again, as I said, this is a very interesting fund and a concept. If people really understand it, they will be able to relate to it in a lot of ways. Because I said we do it at our individual level as a multi-asset fund managers. But like I said, the mother of the family, she just does it in such a beautiful and an easy manner and in a consistent manner. And if there is a fund which also can help us provide that, then it becomes like an all-weather fund, all-season fund, and a comprehensive solution. So if people can really understand these concepts, then I'm really confident that they'll be able to do justice to these kind of funds, and they could be a lot of value. So thank you so much everyone for helping us to share this. And if there are any further questions, you all can reach out to our team, and we're here to help everyone.
Yes, thank you, Herin, once again, and thank you for putting up the example so that people can be definitely clear about the understanding. Thank you once
All right.
again. Thank
Thank you,
you to you
everyone.
and
Thank
your
you.
team, and thank you all the partners for this patient listening, and thank you for allocating your time to us. Thank you once again to all the partners and colleagues. Thank you for joining
Excellent.
in.
Thank you. Thanks,
Thank you.
everyone.
Thank
Have a
you.
good evening.
Thank you. Yeah. Good.